Yo, what up, everybody? It's your boy Eric here from Black Market Exchange. I know you get your cup of coffee heading into work right now, and it's time for you to get your stock market fix right here on Market Mondays. Yes. Welcome back to another episode of Market Mondays. Today is February 2nd, and we want to go ahead and bring you some great topics today. We got YHOO about what they spinning off. We're going to talk about Shake Shack, how they shook up the game with their recent IPO, and Amazon, how they're trying to get up into your workspace. But first off, we're going to talk about Apple and how they blew off the top with their earnings. So first up is Apple under the ticker symbol AAPL. They reported their earnings last Tuesday and blew investors' minds. Good Lord! They sold 75 million units of iPhones, specifically the iPhone 6 and 6 Plus, and revenue is up $17 billion compared to this time last year. So of course the stock price had a turn up of all turn-ups. The stock is up 80% in the past 3 years and 24% since its 7-to-1 stock split back in June of last year. Now, a stock split simply means that whatever current shares they have, they're going to split it into more shares. So if Apple was trading at $700 at that time, a 7-to-1 split is going to result in an investor having one share worth $700. Now they're going to have 7 shares worth $100 each. So it's going to have more shares into the company. And now it's going to promote more investors to buy in because the stock price is actually going to be a little bit cheaper. Now, Apple continues to blow investors' minds, and many are wondering what the Apple Watch is going to do for their bottom line as well. Time is ticking. Now, YHOO, YHOO, is looking to play a spin doctor here after it released its earnings last week as well. It's going to take its remaining stake that it owns in Alibaba, which is under the ticker symbol BABA, and based on Alibaba's share price on January 26, it's going to take that money and form a spin-off company called SpinCo. Now, SpinCo is just going to be an independent investment company, but it's also going to be publicly traded on the stock market. The best part about this is it's going to be tax-free. So the money that YHOO has made from Alibaba shares since the IPO of Alibaba, they're not going to have to pay any taxes on that, which is a great sign for their bottom line, and investors are simply loving it. And they're actually going to get prorated shares once this happens later this year. YHOO is up almost 200% in 3 years and 26% in the past year. Now, Shake Shack, the burger and fry company under the ticker symbol SHAK, shook up the investment world on Friday with its IPO. Now, we're going to cover IPOs in our Teaching Thursday segment this week. So stay tuned for that, and you'll get a little bit more information as to how IPOs work and what they are. But we continue to also watch Empire, as we know that Lucius Lyons is trying to take Empire to make them publicly traded as well. So maybe we'll get a little bit of information on that as the season progresses. Shout out to comedian CP for his continued efforts with that show as well. Yo to the noobs. Now, back to Shake Shack. Shake Shack had an IPO price of $21, which was actually up from the $14 to $16 range that it was proposed to have initially. And once the markets opened, the stock shot up 119% to $46. Now, that is for all the big investment companies, and that was before retail investors like you and I can get in.
Mortimer, we're back.
But once it hit the $46 mark and they kind of took their pickings when you and I got in, or if you chose to get in, then the stock was kind of stagnant until then. It actually went up a little bit, up to $52 before it came back down, and it closed just under $46. Shake Shack is a New York-based company and is traded on the NYSE. Now, for our last bit of news this week, we're going to talk about Amazon. That's AMZN, and everybody's familiar with Amazon. It's a tried and true company. I'm sure you've shopped there. I know I've shopped there before. They actually just announced their new project called Workmail, which is simply their response to Google's Gmail and Microsoft's Outlook. It's going to be an email calendar service geared towards employers and businesses, just to keep their companies well integrated and continue to function.
We have sort of a problem here. Yeah, you apparently didn't put one of the new cover sheets on your TPS report. Did you see the memo about this? I'll go ahead and make sure you get another copy of that memo.
Amazon is up 973% in 10 years, 100% in 3 years, and is only down 4% in the past year. Amazon's net income continues to be in question at times, but since the company is such a tried and true company, it's clearly not going anywhere and doesn't seem to be affecting anyone, particularly the investors who continue to put money back into the company. Amazon actually has a new competitor in the stock market in Alibaba that we mentioned earlier because they're China's biggest e-commerce site as well. Thanks for tuning into this week's Market Mondays. We hope it was informative and educational. We hope it teaches you how to see what news is out there in the market about companies that you are familiar with or may not be familiar with and how that can affect the company's stock price. Continue to seek out information. Tune into us this Thursday. As for our Teaching Thursdays, we're going to talk about IPOs or initial public offerings, so you'll know what they are, how they work, and how they function the way they function for investors like you and I, as well as for the big name investors like Goldman Sachs. So stay tuned for that and continue to just be nice in 2015 so you can get this Brent money.